Good afternoon, ladies and gents. Welcome to the last session of our 5-day webinar series, Engage 2.0. The topic for discussion is growth prospects for graphite electrodes consumption. And our esteemed speaker to shed some light on the subject is none other than Mr. Gordon Johnson, who is the CEO and founder of GLJ Research. Mr. Gordon has a major in both finance and economics and has over 14 years of industry experience as a research analyst. He has been ranked by Bloomberg among the top stock pickers in steel, graphite electrodes, electric vehicles, and the solar space. He has also made numerous TV appearances in Bloomberg and CNBC. You can find several of his interviews on YouTube as well. It must be 6 in the morning in New York, where Mr. Johnson is joining us from. Grateful that you have been so accommodating and gave us a confirmation at the first approach. Welcome to Engage 2.0, Mr. Johnson.
Hey, thanks for having me. I love being invited to the prestigious Stillmint webinar. And just let me know if you're ready for me to get started.
Pleasure's all ours. I would first like to also take this opportunity to thank the Ministry of Steel, Government of India, and the Indian Steel Association for their valuable support. We at Stillmint would also like to extend our gratitude towards NMDC, JSW, and Tata Steel for sponsoring this event. Before we begin with Mr. Johnson's presentation, I would like to give a brief backdrop. Post-COVID, graphite electrode prices across the globe has seen a recovery of about 40 to 45% so far. The rise in prices can be attributed to increased global crude steel production via the EAF route, while rise in also because of the rise in key raw material prices, the needle coke especially. Global electrodes consumption stands at around 1.12 million ton. However, the global trade dynamics have not changed much, as China continues to be the top exporter of electrodes, while majority exports are directed towards Russia and Turkey. China is followed by the European Union, India, and Japan as the major exporters. With regards to imports, the top importer for electrodes is US. They import majorly from Mexico and India and Russia as well. US is followed by Russia, Turkey, and South Korea as the major importers. Just to add in the mix is the Russia-Ukraine war. Russia is a net importer of graphite electrodes, with 70% of their imports coming in from China and the remaining 30% from the European Union. To see how the trade dynamics have changed and what the future holds for the electrode industry, I now invite Mr. Johnson to share his views. Those attending can also put up their questions for Mr. Johnson in the chat box, which we will take up right at the end. Over to you, Mr. Johnson.
Hey, thanks a lot again. Thanks for that introduction. That was great. So I'm just going to run through my presentation. Just as a disclosure, I'm going to be looking down at the presentation. So if I'm not looking at the screen and it's a bit awkward for the viewers, I apologize. So let's start with the cover. Our presentation is titled U.S. Graphite Electrode Sector Update. Is the recent strength in prices sustainable? Subtext is the next graphite electrode, quote unquote, bull market upon us. So turning to the first page, the question I think on everybody's mind is graphite electrode prices are rising, right? And I think clearly the answer is yes, but let's go to page 2 and let's look at, what we're seeing. So year-to-date 2022 in USD terms, ultra high performance 600 millimeter Chinese graphite electrode prices are up 19.1%. That's year to date. The price increase from the beginning of the year to today. Now, as you can see in both of these charts, there was a precipitous decline in graphite electrode prices, and indeed they have rebounded, but still well off the highs set in 2019. So going to page 3, looking at 400 millimeter high performance graphite electrode prices. Those prices too, while they collapsed in 2019 and 2020, they're up 13.5% year to date 2022 adjusted for USD terms. So there's reason for optimism. There's reason for optimism. And then turning to page 4, this looks much more bullish. Looking at graphite flake prices in USD terms, again, year to date, only up 0.8%, but you can see they've rebounded back to the highs and levels we saw back in 2018. Now, this is positive for graphite flake prices, but keep in mind, this is an input. So this would be margin negative for the companies. So turning to page 5, we have an overview of a number of different graphite electrode prices: 600 millimeter ultra high performance, 500 millimeter ultra high performance, 500 millimeter high performance. And you can see on the year-to-date column all the way to the right, you can see that the prices for the substrates that the companies that we look at use are robust. On a USD adjusted basis, 600 millimeter up 19%, 500 millimeter high performance up 20.7%, and then 500 millimeter high performance up 14.9%. And then you can look down the list and see the rest. So turning to page 6, the question then is, okay, so why have graphite electrode prices risen? Now, clearly, in the introduction, there was some commentary given, but we want to give some of our thoughts. So if you turn to page 7, what you're looking at here is the spread on the forward LME still prices, and you're looking at the spread between rebar futures and scrap futures. And as highlighted on the page, in general, if the electrode spread on forward LME contracts is widening, demand in general for electric arc produced steel is on the rise and vice versa. Thus, with the graphite electrode spread on LME forward contracts exploding plus 47.7% as of 3/10/22, that's March 10th, 2022, year over year, this would suggest the demand for graphite electrode has indeed increased, which is some of the underpinning of the price increase. Turning to page 8, what this looks at is World Steel Association crude steel production. And what's key here is why the chart looks, there's been a big decline. Keep in mind, year-over-year growth is still positive. So with World Steel Association data showing continued growth in global crude steel production, we've increased our graphite electrode production growth forecast for 2022 to plus 3.7% year over year, from down 1% year over year. And stated differently, while we were expecting supply to fall 4.9 thousand metric tons, we now expect it up 18.3 thousand metric tons because of the positive shift in prices. So turning to page 9, looking at graphite electrode supply demand. This is the GLJ Research graphite electrode supply demand. We're looking at just the ultra high performance graphite electrode capacity, excluding China, plans from key producers versus electric arc furnace steel production. One observes a structural oversupply of material annually. So the point is, there's been, if you put together a supply demand analysis on graphite electrode, what you'll notice is a structural oversupply. But that doesn't match with the fact that, prices have moved up this year. So the point is, there must be more at play. So going to page 10, just highlighting that point, graphite electrode cannot be in structural oversupply, given you've seen a pretty robust rebound in 400 millimeter high performance prices, and clearly the higher performance graphite electrodes as well at the 600 millimeter, 500 millimeter level. So going to page 11, this is a different supply demand model that we put together, and we call this the real graphite electrode supply demand model. And effectively, this is graphite electrode supply limited by the available needle coke. And with Phillips 66 carrying out a major debottlenecking in 2018, allowing for an incremental, at the midpoint, 60,000 metric tons per year of petroleum needle coke. That's helped the market, exacerbated by Seadrift's USA production expansion of 15,000 metric tons per year over the course of 2018 and 2019. That's helped the needle coke market. We do believe that on a real basis, the market went back into structural oversupply around the first half of 19 and has remained there. So we do believe on a real basis, we're still looking at structural oversupply. So if you go to slide 12, This is needle coke supply demand. And you can see that effectively factoring in global electric arc furnace steel production of 3.5% year over year in 2022. Chinese electric arc furnace steel production of 2.5% year over year in 2022. And lithium ion battery anode demand of plus 19% year over year in 2022. While we still have structural oversupply in the needle coke market, we have that oversupply falling from 432,000 metric tons per year in 2021 to 311,000 metric tons per year in 2022. So again, while there's still structural oversupply, that oversupply is tightening, which would be positive if you're a bull in the graphite electrode space. So turning to slide 17, this is looking at petroleum needle coke supply demand. And again, it's the same type of dynamic. It's a little worse. You still have structural oversupply, but you know, and it's not tightening as much as the prior slide. But you do have some incremental capacity coming back into the market. You can see the comments at the bottom of the page. So turning to slide 14, we have graphite electrode prices have rebounded off the bottom. This is our projection for graphite electrode prices. And in general, in commodity markets, when supply is greater than demand, price equals the marginal cost of production. Thus, and we'll talk about this further in the presentation, with weakening steel demand in China still, tensions between the US, China, and Russia, clearly with the invasion of Russia, and China seemingly siding with Russia so far, and waning global steel demand, we'll talk about that, plus a lot of high-end petroleum needle coke capacity being added in China. For now, as you can see, if you look at that chart, you know, we think prices bottomed in 2021, and we do expect some upside, modest upside, as you see in that chart, but we don't expect, the strong kind of hockey stick-like move higher that we saw in 2018 and 2019. We do expect some upside, but we don't expect hockey stick. So now the question is, okay, slide 15, will China's economy come to the rescue? So we want to look at China's economy. So turning to slide 16, we think there's a big problem in China's construction economy. And what this slide looks at is it looks at excavator sales on a 6-month moving average year-over-year growth, as well as property starts year-over-year, not 6-month moving average, just property starts year-over-year. And looking at both excavator sales and new property starts, which are both leading indicators as to how China's construction economy is performing, we note that both are in decline currently when looking at year-over-year growth. In short, this is not good. So China's construction sector is looking sick, quote unquote sick, if you will. So turn to slide 17. This is looking at property new starts as per the prior slide, as well as property sales. And what's key to remember, everybody listening to this webcast probably knows this, but China consumes half the world's steel. And property is the most steel intensive segment in China at roughly 30% of overall steel consumption. That's property. So with year-over-year growth in new starts in China still trending negative, it would seem that the property sector will continue to fall. We're going to get into this more, which is a key source of demand for steel. Keep in mind, China consumes 90% of the world's seaborne iron ore and roughly the same amount of the world's seaborne steel. So as goes China's property sector, as goes the global steel market, specifically steel market demand. So turning to slide 18, we're looking at the China Credit Impulse year-over-year growth, as well as the Bloomberg Metals Commodity Index. And while the year-over-year growth clearly for China's Credit Impulse has turned positive, we're looking at positive year-over-year growth. That's off of easy comps. You can see that red line in the chart. And you can see that it's starting to turn down negative. In fact, just today, I'm sure everybody knows, China's total social financing just came out, just hit the tape. And it was a big disappointment, despite a lot of red flags and question marks with respect to growth in their economy. So it looks like their government is not going to be aggressively expanding credit. And I think this chart reflects that. So year-over-year growth in China's credit impulse has surged in recent months, yet it's actually continuing to worsen if you look at the growth slowing down. So turning to slide 19, and this is a key slide. What we're looking at here is the 770 city new house prices in China. And what we're looking at is the key metric here to look at is the blue line, and that's the month-over-month growth, essentially in China's home prices. And this is very important to remember. You know, housing accounts for 78% of Chinese consumers' net wealth, versus that number being 35% in the United States. So the point is, as housing prices fall in China, you know, that's a massive drag on consumers' wealth in China. And that means that affects consumer spending for everything, to include houses and thus the construction market. So turning to slide 20, the question is, you know, we see a big problem in China. There's a big problem that a lot of folks are talking about. The question is, what is that big problem? So turning to slide 21, what we're looking at here is we're looking at what we define as the big problem. And I think what many investors have forgotten about is, remember the Evergrande crisis in 2021, a lot of people were talking about that. But when looking at the USD bonds of the 5 largest China developers who have reported combined liabilities 3 times larger than Evergrande, the picture looks grim. You can see this is what the bonds are trading at. They've collapsed in value. They're trading at cents on the dollar. This suggests we're in default territory, and suggests the problems that were brought up with Evergrande and a lot of people worried about. Again, these five companies, the liabilities are 3 times larger than Evergrande. So we think there's more pain to come in China's property sector. And if you turn to slide 22, this is looking at last September. This was the first broad panic in the sector. You know, not this chart, but that was when you had the Evergrande panic. And it was followed by months of deterioration masked by happy headlines. And in the past 3 weeks, property stocks and bonds in China are collapsing. And this is the Hang Seng Index. You can see that it's in free fall, and it's actually taken out the COVID crash lows. So turning to slide 23, this is looking at Sunac, HK1918. It's one of the largest developers in China, and it's, you know, been highlighted at length. But it's now, this is the company. It's now down 50% in the past 3 weeks, including 9 points yesterday, bringing its total drawdown to 89% from the 2020 highs. So again, the market in China is telling you that the risk to the property sector isn't over. Again, property in China, 90% of global steel consumption, 90% of iron ore consumption is China, and within China, property is 30% of steel consumption. So again, as goes the property sector in China, as goes the steel sector. So turning to slide 24, this is looking at Country Garden's USD bond, and it's traded from 97 cents on the dollar in September to just 50 cents on the dollar currently, nearly cut in half. So again, a key underpinning of risk in the Chinese market. So turning to slide 25, this is continuing with the big problem. You know, Reuters reports that Chinese commercial paper defaults doubled in February of this year amid the property crisis. So the point is, this thing is getting worse, not better. And the reason we're highlighting all of these data points is because I think a lot of people are optimistic with respect to electric arc furnace and graphite electrode prices going up. But I think the problem is, if you look underneath the hood at the fundamentals of the sector, they're deteriorating at an accelerated pace. And despite that fact, again, today, China came out and you saw total social financing disappoint. It was nearly 50% below what consensus estimates are, down significantly from January. So it looks like the government isn't coming in to provide that that help, if you will. So it looks like things could get worse from here. So the question I think a lot of people are also asking, and we don't want to get too bogged down in this, but we do have a slide on it, is could China's big problem culminate into a banking crisis? That's slide 26. So if we turn to slide 27, what we're looking at here is the total equity of Minsheng Bank and the equity to asset ratio. That's the blue line. And when you look at adjusted based for the midpoint of the estimated hidden non-performing loans. That's the orange line as reported. So as reported, it looks like Minxin can sustain an 8.3% decline in asset value. But when you adjust for those NPLs, it looks like they can actually only withstand a 2% drop in asset value. So we do think that the contagion risk in the property sector could potentially spill over into the banking sector. And I don't think we have to tell anybody on this webcast what that could potentially mean. You're talking about, a global financial crisis banking sector issue that we saw kind of similar to, 1 second here. Sorry. Let's see here. Sorry. So you're talking about a banking sector crisis similar to what we saw in the US. So turning to slide 28, talking about something optimistic, what are the key factors that could push graphite electrode supply demand back into deficit, meaning prices would see that kind of hockey stick recovery? And there's four key things we would highlight. One is a significant reduction in capacity from large graphite electrode producers, a resurgence in Chinese economic growth, quicker transition to electric arc furnace production from blast furnace production, or quick / rapid resurgence in global PMIs. So if you turn to slide 29, this is looking at our, the GLJ research global graphite electrode supply demand model. You can see where our key assumptions are and how we're getting the surpluses we see in 2022. Turning to slide 30, this is looking at exports of graphite electrodes outside of China. And what's key to remember is in 2021, graphite electrode exports versus 2019 were up 8.3%. The reason we compare it to 2019 and not 2020 clearly is because 2020 was a COVID year. So we don't think that's a good comparison. The important factor is, if graphite electrode exports are up out of China, that's negative for prices. If that number was down, that would be positive. In slide 31, I think something that a lot of people may not be aware of. This is from Graphtex, going all the way back to the first quarter of 2011, where the CEO made it clear that both petroleum and coal tar pitch are interchangeable, and you can use it to make ultra high performance graphite electrodes. So the point is, there's been some naysayers in the US who have thought that you can't use ultra high performance Chinese graphite electrode to make steel in the US. And we disagree with that. We firmly disagree with that. So that's the end of the presentation. I think one other thing we want to highlight is in the USA, the bulk of the pig iron that is used to make steel in the EAF process comes from the Ukraine and Russia. So you may get a shortage. You may get a shortage of EAF production in the USA, which could actually be bullish for graphite electrode prices as that's fully, discounted into the market. So with that, we'll open it up for Q&A.
Thank you, Gordon, for that insightful and deeply engaging presentation. I must admit that I have some predefined questions, but you have already covered almost all of it in your presentation, but I'll still go ahead and ask those questions. It will be a recap for the audience.
Sure.
So my first question to you is, post the pandemic year of 2020, graphite electrode prices have globally risen by an average of 45 to 50% in the spot market. But the percentage rise in the case of HP grade of electrodes has been more as compared to the UHP grade. What is the reason behind the same?
Yeah, so I think the reason behind that is, I think overall demand, right? When you're talking about the publicly traded companies like the Graphtex and the Shawadenkas, et cetera, I think overall demand has been somewhat less than what people expected. Prices have been strong for commodities overall, but I think specifically for graphite electrodes, the demand has been somewhat less than expected. And I think the reason for that is the preference has been for, in the US has been for, still for the, car market where blast furnace still is more preferred. So I just think right now the sectors that the EAF furnaces basically feed, if you will, have not been as strong as the sectors that the blast furnace producers feed. And I think that's why you haven't had the same resurgence in UHP graphite electrodes versus HP.
My next question to you is, graphite electrode prices, although are high, but still have not reached the levels seen in 2017, when China announced structural changes in its graphite electrode industry. Will the prices ever reach those levels again in the near future?
Yeah, and this actually gets to your prior question. I meant to say this, I didn't. One of the other key drivers of why graphite electrode prices have not been strong is, a collapse in China's property sector, both from a volume perspective and from a credit perspective, like I mentioned with Evergrande and the 5 bonds we highlighted in the presentation. So the biggest driver of ultra high performance graphite electrode prices globally is China's construction sector. And that sector has come under tremendous pressure and continues to be pressured today. So I think that's also a key driver for why graphite electrode prices have underperformed. Ultra high performance have underperformed high performance, and overall graphite electrode prices have underperformed broader steel prices like HRC prices, whether you're looking at the USA, China, or Europe. So will prices get back to the levels we saw before? We think it's going to take a long time. And, when we say a long time, 5 to 10 years. And the reason is because China looks like it's in a secular decline, and President Xi looks like he's unwilling to aggressively stimulate. I want to highlight a statistic for you here. So if you look at the price to income ratio, the price to income ratio of property in China, in Shanghai and Shenzhen, it exceeded 40 times more recently, compared to 22 times for London and 12 times for New York. So the point is, property is just too expensive in China. It's just too expensive. So if Xi was to push forward another aggressive stimulus, given the bulk of those properties are owned by government officials, 40, 50, 100, 1,000 properties, there's a lot of deception in that market. So what Xi needs to do now is he needs to let prices fall. So you have a massive slowdown in the construction market in China. And what I think everybody's hoping for is a 2017, 16/17 like stimulus. And we don't think that's coming. So we think President Xi is letting the market correct due to his common prosperity goals. So we don't think you're going to get a massive resurgence in demand for property, organic demand, or inorganic demand rather for property in China. So I think it's going to be a long time before we see those prices, those highs that we saw before.
Right. Let's talk a bit about the ex-China markets then. The global steel utilization ex-China has improved by 5% in Q4 of 2021 to 75%. Does this mean demand for GE will improve further in the ongoing quarter? And are countries likely to see the highest rise in demand now for GE?
Yeah. I think that, pre-Russia invasion of Ukraine, I think the answer would have been yes. But I think with the invasion of the Ukraine by Russia and the subsequent inflation we've seen of wheat, corn, oil, etc., I think that the impact to the consumer in the Western world and other non-Chinese markets is going to be profound. It's going to be profound. So whereas the answer to that question would have been yes before, I think that the ability to spend from consumers in countries like the US or Europe, European Union countries, and some of the other more developed countries, India, et cetera, I think it's going to be strained. So I think that this year, for select steel substrates and select markets like the US, where I think people are afraid to import steel due to the war, and you have, a lack of pig iron, I think prices will be strong in the US for, HRC steel. But as far as graphite electrodes, I think that, graphite electrodes serve some of the, kind of more mundane markets, if you will. I don't know if that's the right word, but that's how I describe it. So I'd expect that until we get past this inflation hump, I think that prices will remain relatively subdued. I think prices will go up because I think you're going to have, we recently did a piece where we took our price target of U.S. Steel and Cliffs higher, Cleveland Cliffs, two U.S. Steel companies higher, because we think you're going to have, we think we're entering into a commodity super cycle, the likes of which we haven't seen since the 70s, when Lyndon B. Johnson implemented policies to, bring down that wealth inequality gap. So I think that prices will go up, but I don't think you're going to see the swift recovery that a lot of people are expecting and or hoping for. And I think, again, a lot of that is due to this inflationary push from Russia's invasion of the Ukraine.
So what you're saying is that, because of Russia's war with Ukraine, which has led to sanctions on Russia by various Western countries, prices are expected to go up as the cost pressure on needle coke would increase significantly. Also, if you can dwell a bit on will the graphite electrode consumers, will the graphite electrode producers be able to pass on such a hike to the customers? Do you expect steel companies to, levy a surcharge due to the rising input costs?
Yeah, there's no doubt. I mean, across the board, across a number of different industrial and commodity sectors, these price increases are being passed on to the customer. But I think that, listen, there's been a massive underinvestment across all of the quote unquote, what we call old economy sectors, whether it's, steel, mining, paper and pulp, chemicals, equipment, industrials, consumer. If you look at tech, the CapEx is roughly, flat. But if you look at all of those other quote unquote old economy sectors, you're talking about a CapEx decline since 2014 of anywhere from 30% to 600%. So there's just been a mass underinvestment of the stuff we buy. That is inflationary. As demand comes back, that will actually drive prices up, because as demand comes back, you'll have more demand for a product that you just don't have availability of. You look at E&P CapEx, it's down 3 times versus 2015. So all of that is positive. But again, I think that given that the consumer is going to have far less buying power, you just look at simple things like food, energy, shelter, those prices are skyrocketing higher. So I think that given the consumer is going to have less buying power, I think that, optimism in the global graphite electrode space, particularly given the weakness in China, I think is going to be somewhat subdued. Because keep in mind, if the Chinese property market falters, which it is, those graphite electrode producers in China will ship that product out into the rest of the world, like we saw, last year with exports up 8% versus 2019. That number will probably jump even further. So you'll have pressure on prices in non-Chinese markets. So again, I think the outlook in the non-Chinese markets is more bullish than the Chinese market. But I think given the pressure we're seeing in China, the inactivity from the Chinese government with respect to, pushing credit into the market to drive, economic activity, I think you're going to have exports out of China that weigh on some of the non-Chinese markets. So I think the Chinese exports are going to subdue the optimism you otherwise would have seen.
Right. Now, with graphite electrode exports from Russia to US and the European Union likely to be hampered, even if the conflict ends, will this provide an opportunity to other G-producing countries like India and Japan to expand their business as China attracts anti-dumping duty on EU electrode imports?
Yeah, absolutely. But the question is, at what price? The question is, again, is the consumer going to be able to handle that price? And I think more importantly, the question is, given what's happening in China, how much graphite electrodes are they going to export to the rest of the world? I don't have data, maybe you guys do, on exports so far of graphite electrodes out of China in 2022. But I think that's going to be a key number to look at with respect to optimism on the market this year. And we haven't seen those numbers yet.
Sure. And what about the demand from electric vehicles? Isn't that?
I'm sorry, the demand for?
Demand for
Did you say
needle coke
electric vehicles?
Demand for needle coke from electric vehicle industry.
Okay, are you saying electric cars or no?
Yeah, lithium-ion batteries.
Okay. Yeah, so, that's something that I think is more of a headline than an actual reality. There's no doubt the growth of electric vehicles is robust, but keep in mind, in 2021, electric cars are roughly 6% of total global auto sales, despite billions of dollars in incentives. So there's no doubt that demand for electric cars is growing. But I think that given the high price points, just yesterday, Tesla raised its prices across the board, anywhere from $1,000, I think, to $1,200. You're talking about on average, if you just think about it, these are the facts. An electric car on average costs way more than an ICE car. It's far less in miles per gallon, and it's far less efficient with respect to, there's gas stations everywhere. There's not chargers everywhere. So I think that the broader shift to electric cars, despite the push from Western governments, I think is going to remain somewhat subdued. And also given, you're having electricity scares in a number of Western countries, I think this push is going to be somewhat lessened. So I do see that, no doubt, as a big catalyst, maybe in 2023 and 2024. But I think in 2022, you may not see that big catalyst emerge. I want to take a step back. I know I sound bearish, and I am. But, I think that the commodity sector, to include graphite electrodes, will significantly outperform the technology sector this year. I do think that if I were to pick where I'd be invested in the commodity sector, it wouldn't necessarily be in graphite electrodes. It would be more so in blast furnace steel. But I do think that, prices are going to move up for graphite electrodes, not significantly. And I think it's going to, outperform the technology sector. So maybe that's a positive kind of take on what's been a bearish presentation.
Yeah, it's quite a tricky situation because, even coking coal and energy prices are shooting up. So along with scrap prices as well. So it's still not very clear which route would be the preferred one, and whether it be blast furnace or the electric arc furnace route where production would increase. So what you're saying is that, the sharp surge in costs and high freight rates would result in lower steel production and thereby reducing demand for graphite electrodes.
Correct. I think that given that you're having, a massive increase in the core things that every human needs, food, shelter, energy, I think that that's going to reduce the overall discretionary spend of, for everything. And I think that's going to negatively affect the steel space, particularly the graphite electrode space, given, again, that other dynamic of, I think, a lot of dumping into the global market from China, given their property sector is in a state of, of disarray.
Right. This would be my last question to you. Do you see any needle coke plants coming up globally?
I haven't heard of any. That doesn't mean there isn't. It's just something that we haven't done a lot of research on recently. I highlighted the ones that have come up, prior. I'm sure you were aware of that, Rohan, but we haven't seen any. We haven't located any recently. Again, that doesn't mean it's not happening. It's just something our team hasn't focused on year to date. So I guess the answer to that is I'm probably not the best person to ask.
Yeah, even we haven't heard of any new graphite needle coke facilities coming up. Just one last question from my side.
Sure.
The US had imposed sanctions on Iran in 2018 amid some political tensions between the two countries. Is there a likelihood of US removing sanctions on Iran? Because that would, I'm sure that could have some impact on prices.
Yeah, no doubt about it. So, there's been a lot of rumors, and then there's been comments from the White House denying those rumors. For instance, there's rumors that we're negotiating with, when I say we, that the United States is negotiating with Venezuela. There's rumors that we're negotiating with Iran to get, to get oil into the country. The White House has come out and denied some of those rumors. So the answer is, I really don't know. I think that inevitably, I think what's going to happen is there's going to be a strong social push in the United States. You're already seeing this if you watch the news, even on some of the more liberal stations like CNN and MSNBC. You're seeing they're having guests on that are saying we need to pump here. In general, the idea is, why are you going to buy oil from, a foreign, quote unquote enemy / hostile, country versus just pumping it in the U.S. And so far, the Biden administration has stood its ground, stood firm. But just yesterday and this week, we've heard the Biden administration come out and say, hey, we're not against pumping. So it looks like they're changing their view. When they do their strategic reserve releases, we've likened it to taking a cup of water, heating it up and throwing it into the ocean with the attempt to heat up the ocean. They're releasing amounts of oil that equate to like a day and a half of production. It's I don't know what to say other than it's laughable. It's going to have no impact. So as those gas prices continue to go up, which we think they are, because against the backdrop of Russia, you also have a massive underinvestment in the E&P sector. So there's just no oil available that's being pumped in the US. I think that they're going to have to aggressively shift towards pumping here. So if I had to guess on my own, I would guess that we're not going to aggressively negotiate with Iran. But this administration have done some crazy things. So I'd take the probability of that happening probably at 40%, the probability of us pumping at 60. So that's probably not answering your question, but that's kind of the probability we place it at.
Get it. Right. There's one question from the audience. A delegate has asked that, do you see China's construction sector recovering from the Evergrande crisis this year? I'll just add to that, or do you see several other, construction giants also going down?
Yeah, so that's a good question. And I'd recommend, 1 second, let me just get to the slide here. Yeah, slide 21, if you could pull that back up. This is the 5 largest property developers in China and what their debt is trading at. And you can see that, some of these bonds are trading at 20 cents on the dollar. I think the highest one is like 50 cents on the dollar. That's default territory. That means these bonds are effectively in default territory. That would suggest, and again, these guys have 3 times the liabilities of Evergrande. So to answer that question specifically, very short, I think it gets a lot worse from here. And you're seeing that in the bond prices. You're seeing that in the Chinese stock market, whether it's the Hang Seng or some of these other stocks. So I think things get worse before they get better. I think that, given the extent of, the largesse in Chinese property market, where you have, we've been to China, I'm sure everybody else has, full cities of, empty offices where, these homes are owned by, Chinese government official, 50, 100 homes that nobody lives in. And the price to income gap, China's sitting at 40 times versus, 20 times for London and 12 times for New York. I don't think China has the income on an overall per person basis as those two locales. I think things get a lot worse before they get better, unfortunately. So that's why we're not bullish. That's why we're, our tone is much more bearish. And I think a lot of people that maybe have presented, I think a lot of that is due to the China property sector. And again, despite all of that, total social financing credit comes out in China today, misses the estimate by roughly 50%, down significantly from January. So it looks like, again, the Chinese government, or the quote unquote white knight, is not going to come to the rescue of the sector.
Well, I think that was the last question, and that we could accommodate for this afternoon. Due to time constraints, we have to bring this webinar to a close. Again, a big thank you to Mr. Gordon Johnson for joining us at an odd hour for him and sharing his knowledge and insights with us. I'm sure the audience enjoyed this session in particular. Also, we would like to once again extend our gratitude to our sponsors for this event, JSW Steel, NMDC, and Tata Steel. and the Ministry of Steel, Government of India, and the Indian Steel Association for their valuable support. Any final comments, feedback for us, Mr. Johnson?
Yeah, I mean, again, I think that my comments were quite bearish, but I just want to stress, you know, when in the United States, the last time we had a commodity super cycle, it started in the 60s, and it was driven by Lyndon B. Johnson deciding that, you know, he needed to implement policies that basically at the time took the wealth inequality gap, where you had the rich holding so much of the income versus the poor, and shrink that. And I think that we're looking at a similar dynamic now. I don't think that the Biden administration is fully there, but the Fed in the United States has said that, you know, they're going to raise rates. They're going to, you know, they stopped QE. And if you look back to the 1960 timeframe when Lyndon B. Johnson implemented those policies, you had a commodity super cycle that was driven by dynamics that essentially didn't end until the 1980s. So while we do believe that the near-term outlook, you know, 1 to 1.5 years for graphite electrodes is bearish, more bearish even than, you know, the blast furnace / HRC space, I think over the next 3 to 5 years, it's probably going to be a great space to invest in as it gets swept up in what we think is going to be a commodity super cycle. And one of the key drivers of that is not only the policies that Biden and co. and some of the other, you know, global governments are implementing, but also by the massive lack of investment in a number of sectors, where again, the stuff we buy, right? When you go out to buy a car, you buy clothes, it's just those companies haven't invested CapEx to have the, you know, basically product available, the stuff, if you will, that people are going to want to buy. So once we get past this war, once we get past the weakness in China, I think the upside is going to be tremendous. So while you may have some weakness this year, maybe a little next year as well, I think over the next 3 to 5 years, it's going to be a great space to own.
Well, thank you for ending it on a positive note. Thank you. Have a great day.
Absolutely. Thank you for having me. Hey, take care.